Welcome back to the weekend rate sheet, where I'm here to help you keep informed and empowered in this ever changing mortgage market. We have a lot of crucial updates this week, so let's go ahead and dive into it. We had multiple reports come in this week, but none of them boding well for rate cuts anytime soon. This whole notion of higher rates for longer looks like it's going to hold, with every week seeming that it's going to be pushing back farther and farther before we see these federal rate cuts. It started with the CPI report. It came out. Bond markets jumped. The 10-year shot up. We got a little bit of help from retail sales data, but then the PPI report came out and then rates shot back up again. They're almost at a 3-month high and they're still climbing. This doesn't bode well at all for mortgage interest rates, the 10-year. Everything looks like it's going to be higher interest rates. So this refi boom and this buyer boom that we were expecting with lower rates coming in looks like it's going to be postponed for a little bit. But I do want to talk about something: the difference between federal interest rates and mortgage interest rates. So let's hop into that. So this might be common knowledge for some of you. Some of you may have no idea, but let's talk about the difference between federal interest rates and mortgage rates. Federal interest rates are set by the government. They're used to help change and influence economic conditions in the country. Mortgage rates are set by mortgage companies. That's the rate you're actually going to use when you buy a home that's going to affect your monthly payment. They go off each other, but they're not directly related. Mortgage interest rates already have future conditions built into them. So if they expect a rate cut to federal interest rates, that's already factored into mortgage interest rates. It's important to know because a lot of people, like I've said previously, think that mortgage interest rates won't drop until Fed interest rates do. Not the case. They've already factored that in. Make sure you check out the open house of the week this week as well. I was lucky enough to see this in person and fell in love with it. It's a short walk to Washington Square Park and so many different other spots. It's great, priced very well. Definitely check it out. It's a cute home available now, and they have an open house this weekend as well, as you can see in the email. And to wrap it all up, keyword this week and probably going forward is volatility. That's what the markets are showing us. Mortgage rates are changing day by day. So it's important to let us know as soon as possible that you're under contract. That way we can determine if we need to lock in the rates or if we need to float the rate and see how the conditions continue. You also might want to start keeping up with the economic calendar, seeing what reports are coming out and when. If you're going under contract on a Tuesday and a report comes out Wednesday morning and you didn't let anyone know, the rates that they were quoted could already be up, even an eighth of a point at that point in time. So it's important to keep track of that. Next week, the only major update we're going to have is Thursday. We'll have the initial jobless claim. So that's important to keep an eye on, but it's going to be a relatively low key week next week. But I'll try to keep you updated further into the ongoing months. That way you can know what to expect and, expect any kind of volatility in the market. Have a good weekend.